What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day. This channel focuses on trading the ticker symbol SOXL, but you can use this strategy to trade any ticker symbol for any publicly traded company. If you want more details about the foundation of our trading and charting method, check out the description in the video. There's links to free PDFs and free videos to give more details about how we set up our charts using the strat as the basis of our trading method, and more details like that. For today's video, we're going to recap Friday's intraday price action as well as the QQQ internals and take a quick look at things from a week, month, quarter, and year perspective. We'll go over the market maker's expected move for this coming week, the week of September 26th. And then we will set our 4-hour markers and triggers and targets for the day. And then we'll review the triggers and targets for the week, the month, the quarter, and the year. Again, if you want more free information about the foundation of our trading and charting method, check out the description in our video. Now, looking at the intraday price action on Friday, we can see that let's go ahead and bring into focus our 4-hour markers first. So we have here our previous high day at 34.14. We have the overnight high at 33.98, the overnight low at 33.06, and the previous low day. We've also got the 4-hour trigger to the downside here at 33.42, and the 4-hour trigger to the upside at 33.95. So those are our 4-hour markers, and we use those for our intraday scalping and day trading. The general rule is higher lows above opening print, we're looking to get into calls. Lower highs below opening print, we're looking to get into puts. Of course, we want to take into account, if we're in any uptrends or downtrends on the different time frames, the 15-minute, the 1 hour, the 4 hour, the day, to possibly temper any thoughts about how far price action may go. But anyways, lower highs below opening print, we're looking at puts, targeting the overnight low and then previous low day. We've also got here marked on the chart the market maker's expected move low. If you're not familiar with the market maker's expected move, check out either our Thursday night or weekend videos. We go into more detail about those. So hold on here for a couple more minutes and we'll get into the market maker's expected move for the week, and you'll see how we can get that value and put that on the charts. But again, Friday's price action, we got the opening print and an immediate push down. So unless you had puts that you swung overnight, or you took a high risk and just entered puts at open, you weren't going to get this move, right? But we did get a lower high on the 1 minute, a little bit sooner than we did the 5 minute. So the 1 minute was just above overnight low, but it was below opening print. So we did enter puts here. If you wanted to wait a little bit longer for something on a higher time frame, you did get the lower high here on the 5 minute, just at overnight low or barely below overnight low. So you enter puts there. Again, you set your stop above the just above the lower high, which would be just above here. We continued to get lower highs. There were a couple of higher lows, but that just indicated consolidation. Kind of making a bear flag at this point. Then you got the break to the downside, right? Again, continuing to get lower highs, and we got a bounce almost to the cent off of the market maker's expected move low. So again, as we've stated before, the market maker's expected move low or high is not a end-all be-all for price action. It's just that there's a higher percentage chance, 70 to 80% chance that price will stay within that market maker's expected move. Just like last Friday, we saw the price action go past the market maker's expected move, so there is still a chance that it can. So it's not an end-all be-all, but you can see it was a bounce point here, even with dipping into the gap that we have, the highlighted here in blue. This is the gap on the day time frame. We did dip into the gap, but we have talked also in the past about how the tops or bottoms of gaps, depending on which way you're approaching it from. So in this case, it would be the top of the gap. The top of the gap can be a bounce point, right? So we did, from a higher time frame perspective, this is just a wick, right? This is from a 5 minute perspective, but if we're looking at like the 15 or the 1 hour, this is just a wick that just wicked into the gap. We also talked about how half gap is a good bounce point as well, which is where the market maker's expected move high it actually is for the week. The orange is for the day, or for Friday. The purple is for the week. So as you can see, we were already outside the high of the market makers expected move for the week. So that's just a further illustration of how that's not an end all be all for price action. But essentially, this gap was a bounce point for price action. Now, we didn't bounce and just make a V-shaped recovery and go to previous high a day and create a bullish engulfing candle or a green three in strat terms. We didn't do that, but it did serve as a temporary bounce point. So Monday, do we continue to fill that gap? Possibly. We'll continue to look at things. We'll set our triggers and targets. We're not going to get into predictions, but we'll be ready for it if it does go that way. But for right now, it was a bounce point. We were able to recover back up essentially to overnight low by the end of the day. But the hourly downtrend line that we have here in this little bit darker blue, we do have to take that into account as something we may run into on Monday. Now, we've talked about how broadening formations or downtrend lines a lot of times will take a gap up overnight to be defeated. So you can see how there's a 15-minute broadening formation that was formed here at the end of the day with this brighter blue. So to get over this 15-minute broadening formation in 1 hour downtrend line, do we get a gap up on Monday? Possibly. Right. So we'll just keep that in mind. Let's take a look at the QQQ internals and SOXL's price action on the week. So we can see in the upper left-hand part of the page, we've got SOXL's price action. The lower left-hand, we've got vol QD, which is basically just money going in versus money coming out. The lower right-hand corner, we've got ADQD, which is a measure of breadth. And the upper right-hand part of the charts is the tick Q, which is another measure of breadth, but a little quicker mover. So gives you a little bit more, I don't want to say real-time information, but it moves by the tick instead of by the minute, really. So just looking at price action, we can see we've got last month's high here at this green line, 29.66. So you can see we opened here essentially on it, found support from it for about 3 days in a row, which gave us, this was just consolidation. In between this last month's high and then this 138.2 fib extension, which again, if you're familiar with the channel, you should know this, but if you're not, this is the 138.2 fib extension of the last high to low in that 11-week range that we had. Until this week, we were the previous 11 weeks we were in a range from 24 to 28. So price was bouncing from at $24, around $24, $23.50. You could buy calls there and take them on up to the $28 level. There were a couple times we poked up to 29, but 28 at the $28 level, 28.13 more specifically, which was the year flip, which would flip the year green. We were finding resistance for about 11 weeks. So, at that point, you could kind of set your watch on buying puts and selling calls and taking it back down to the bottom of the range at 24. But the last week, or the week previous to this past week, we had a little bit more price action at the top of the range and finding support at the top of the range, which gave this week the ability to pop up and continue the uptrend instead of the sideways range. So we again had the sideways consolidation, bullish consolidation. We got the gap up, a gap and go on Thursday, in fact. And then what we did here is we drew fib extensions for the gap and go, right? So this was the close on Wednesday, this was the open on Thursday, and those are the fib extensions. And you can see how Thursday we played within that range, and then it became resistance Friday morning, and we pushed back down into this 161.8 fib extension of that last high to low range in the range that we had. So we've got it's playing to our levels very, very well. So it's been a little bit easier to trade in intraday particularly, but you can see how The first 3 days on the tick, we were basically along the zero line. Kind of the same thing here on the 80 QD, which is another breadth measurement. Not a, while money was flowing in, it wasn't in trend higher zone. Towards the end of the day, Monday, but not Tuesday, Wednesday. Of course, we had the Fed. And then Thursday, we were up in trend higher zone pretty quick and stayed up there. Friday, just going along the zero line. Breadth on Friday was down. That's why the Qs in TQQ, I'm sorry, in SOXL were disjointed. Really, the Qs were pushing up on the day. SOXL was pushing down. So you could see that in the breadth, right? So what this does tell us, though, when we kind of back up and look at it from just the whole week perspective, we don't have any real negative activity, right? So the bulls are still very much in control. The bears have tried a little bit here, had a little bit more success on Friday, but that was after a week of either sideways or up action. So it was kind of their time to get a little bit back, but for the most part, it's buyers that are in this market. So look for those pullbacks, those higher lows on whatever time frames you're playing, and look to enter more calls, giving yourself some time on any contracts you may buy, so to allow for any sideways actions, especially now that we've kind of poked up out of the range. Maybe we get a little bit more consolidation before we get another push up. But right now bulls are in control. So that's where we stand from that perspective, looking back, right? So if we want to move forward here, let's look at things from the week perspective. Let's get So from the week perspective, we're still looking good, right? We're starting another uptrend, right? We had the sideways action, but then we had the higher low. We had a higher low here, and now we've made a higher high. So we seem to be back in that, if we were to just take again, we don't do too much trend lines, but we do broadening formations, which are similar. But if we were to draw a trend line there, that's not what we were trying to illustrate. If we want to go there, right? This was the V-shaped recovery off the April 7 low, right? If we were to just draw an uptrend line here, you can see we're almost back into that level of uptrend, right, after this 11 weeks of sideways action. So right now it looks as though we've defeated this weekly broadening formation. We've left a gap out here, so that does give me a little bit of pause. I want to say it looks like we've defeated it because we do have that wick at the end of the week, and we have the gap here. So Monday, it's possible we go fill this gap and we're brought back within the broadening formation here. And, this is something we may have to deal with for a couple more weeks to try and defeat and get out and possibly fill this gap or test this weekly broadening formation. So I do want to keep that in mind. But, things are still pretty bullish, right? We've flipped the year, right? As for so long, this 2813 was resistance, 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 resistance. Then we started to break through last week. The week previous to this last week. And we found that support this past week, and got that push up. So things are looking rather bullish. If we look at the upper left-hand part of this chart, we have the time frame continuity indicators. So we have the week, the month, the quarter, and the year. They're all green. So again, more momentum to the bulls. This monthly downtrend line that we had to deal with for 4 or 5, almost 6 weeks, it looks like that's defeated as well. So this wasn't a downtrend on the week perspective, but it was a lower high line. Looks like we've defeated that as well. So we'll probably take these off the chart here pretty soon, probably at the end of the month, midway through the next month, for this monthly broadening formation, just because this is a monthly broadening formation. So I want to give it more time than just a week or two. But this weekly downtrend or lower high line, we can probably take off of here. I'm just leaving it on in case if we do fill this gap and then for whatever reason the market goes negative. We got to keep seasonality in mind. September, October are seasonably the worst performing months for tech. SOXL or chips obviously are part of tech, so we've got to keep in mind that we could actually get a pullback for whatever reason, right? So if we do get that pullback, we go back red on the year, we fill this gap here, that brings us back into this lower high line. Now it's not going to be it's not going to be like still a lower high line. I might just actually, I'm just going to take it off. The more I talk about it, we've got horizontal lines, which I like to deal with more than trend lines. So we've got this year flip again. It was plenty of resistance here. If we get back below and close this gap, we'll just use this horizontal line as resistance, right? So that cleans up the chart a little bit more and kind of takes a little bit of the analysis paralysis out of there, right? So that's how things look from the week. We're looking strong. Let's go ahead and get into the month. If we look at the month, very strong once again. We wanted to keep in mind, because last month was a 3 or a bullish engulfer. Again, one of our favorite patterns, reversal patterns to trade, is the 3, 2 up, 2 down. It doesn't really look like that's going to come into play this month. Now we do have 10 more days in the month, which is, I think, 6 more trading days in the month, I believe. So do we come back within last month's price action? Possibly. Like I said, if we come to fill this gap and try and retest this year's flip for the year, that 2813 that we've been talking about. If it wants to retest that to turn that resistance into support, that obviously brings us back into last month's price action. But there's still a long ways to go before you would reach the low of this month, which would have to happen in order to trigger the 3, 2 up, 2 down next month. And again, even if it does trigger it, there's not a lot of magnitude here. Even if it were to reach magnitude, which is the low of this 3, and even if it were to close this gap, we have to be a big bearish momentum to push us down further, in my opinion, right? So again, from the month perspective, looking very good. From the quarter, we've almost reached that the strat magnitude, right? So we triggered the 2 down, 2 up this quarter, the magnitude being the high of the candle to the left of the 2 down. So the high of this candle is that 36.15. So we've almost reached that magnitude. Don't have much further to go. If we do breach that, that does trigger the 1 combo 2 down, 2 up, which is another one of my favorite reversal patterns to trade. What that would target, or the magnitude for this 1 combo 2 down, 2 up, the magnitude for that is the high of the candle to the left of the 1. So that would be this 3 here, which is that 70.08. So again, that doesn't have to happen in a quarter. It may take a couple quarters to happen, but once it triggers, it's triggered, so it's on the board. So we do want to see this 36.15, the high of this candle, breached to trigger the 1 combo 2 down, 2 up, and let's see what happens, right? We can continue to push up the rest of the year. Maybe we make it to last year's 50%, which is this 46.79. Maybe we even go above it, fill this gap. But that would put us very handily in a 2 down, 2 up position for next year. If we look at the year candle, let's just take this off there, right? So if we look at the year, work with me, think or swim. We saw we had the 1, or the inside candle, in 2023, the 2 up, the failed 2 up in 2024, and then what appears to be a failed 2 down in 2025. If we continue to push up, make this a hammer, or even extend the body to a large body, then we are in good position to go 2 down, 2 up the next year, 2026, and that magnitude is again this 70.08. So 2 down, 2 up, wherever it would trigger next year, say at this 46.79, we go above that, then we're targeting 70.08 for 2026. But we've got to see how the rest of the year finishes out, right? Still got another quarter to go. Things could easily reverse, but for right now, things are looking very bullish, right? So let's bring in, what we'll do next is take a look at the market maker's expected move for the week. Just looking at the day chart again with a few more of the shorter term broadening formations. We've got last week's low, last week's 50%, last week's high. So it looks like we were able to gap up over this daily and weekly broadening formation. We are still in contention with these 2 daily broadening formations if we continue to push up. If we do drop back down and fill this gap, then that brings these broadening formations back into play. But we do have the last month's high that will be sitting here as support, right? This was previous resistance. If you can turn previous resistance into support, that strengthens the argument for the uptrend. Now we've got the market makers move expected high and low marked out here at 36.03 and 30.01. To get that market maker's expected move, we're using Thinkorswim. What you do is you go to your options chain and you look at the options chain for this week specifically. That's 26th of September 2025, and we can see here there's a plus or minus $3.01 move from the market makers. So with the close at 33.02, you add $3.01 to that, and you've got your 36.03. You subtract $3.01 from that, and you've got your 30.01. Right. So there you have. It's not too big of a or too hard of a thing to find. You just get that options chain. You find that market maker's expected move, and you go ahead and chart it out. Now again, if we look at last week, the market maker's expected move high was here at this 31.85. We gapped up above it, right? So it's not an end all be all, but at the same time, when we look at things from the intraday perspective, and we look at the market maker's expected move low for Friday, price did bounce off of it. So again, it's not an end all be all, but it is a price that you or a price level that you want to know about. Okay. So let's look at we looked at the market maker's expected move. Let's look at the 4-hour markers and the the 4-hour markers and the setup for the intraday, scalping and intraday trading on Monday, our triggers and targets. So again, we talked about this at the beginning of the video, but we have our previous high a day. Previous high a day, overnight high, 4-hour trigger to the upside, overnight low, 4-hour trigger to the downside, and our previous low a day, right? Those are our targets depending upon where price opens and what type of price action we're getting, right? So let's say, for instance, let's go ahead and bring out the right tool here. Let's say, for instance, price action opens here. Let's say that is exactly where the overnight high is, right? Say price opens right at overnight high. If we get a push up and then a little bit of a pullback and we get a higher low above opening print, then we're entering calls, and our first target is previous high a day, right? So you can either unload all of your position there or part of your position. But from an intraday perspective, because our overnight high is here right at opening print, the only scalp target that we have is previous high a day. The next targets you would have to use like your 4-hour targets or your day targets, right? We'll get into those in a minute. Now, say we were to open up here at the highs, at overnight high, we get a little bit of a push up, but then it pushes down below opening print, and we then get a push back up, but we get a lower high underneath opening print. Once we get that lower high, we want to enter puts. We want to first target the overnight low and previous low a day, but we do want to keep in mind the 4-hour trigger levels, because those are our points of inflection as well, right? The last 4-hour candle of Friday's price action did not go above this level or below this level. So there is something to those levels. There's been plenty of times where we've seen price action not reverse at an overnight low or previous low day, but an actual 4-hour trigger. So if we get the lower high underneath the opening print, of course, our first target is overnight low, keeping in mind the 4-hour trigger to the upside. Because it will have triggered the 4-hour to the upside, this may be a perfect support point to continue that push up, right? That has triggered. So we want to keep that in mind, but our first target is overnight low. Second target, again, previous low a day, but we want to keep in mind this 4-hour trigger to the downside. This could be a bounce point as well, because that's, price wouldn't go below it in the last 4-hour candle of Friday. So there's a reason for that. Okay. So it could bounce. It does almost align up with the gap and go high, right? Or this is where the gap and go opened up. And then we do want to also keep in mind this 161.8 fib where we have bounced in the past as well, right? Essentially here. Previous low a day, again, is the final target from a scalping perspective, but that is the top of a gap. So it's perfectly reasonable to leave some runners, leave some of your position to see if the gap will fill. Maybe we bounce off of last week's 50% line. who knows? But we'll watch price action as it comes during the day. But those are the scalping price levels. If we, especially if we get price action to the upside, and you know, we had opened higher up in yesterday's range. Let's go to the swing. You know, if we get the open here and we get the push up and a higher low here, you know, we're entering calls. We're targeting previous high a day first, and then after we are done with previous high a day, you know, we can look at market makers expected move high. If we're having if internals, you know, if they're on fire and we're having a very trending day where the price is just going, you know, 10%, 15% on the underlying ETF, which is not uncommon for your SOXL, that could be your extended target. But we'll, you know, keep the fib extensions for the gap and go that we had on Thursday. That 3507 is going to come into play. And then because that 238.2 fib does come into play with the market maker's expected move high, again, that's going to be a pretty good level to have as an extended target too. Now to the downside, we do have the fib extensions for the most recent high to low in that 11-week range. So you've got your 150 and your 138 fib extensions. Those can be your extended targets to the downside if we get past previous low a day as well. And you've got those scalps or intraday trades. But let's look at things if you're looking at more of a day trade or a swing trade. Let's go here. We've got our 4 hours, 4 hour chart up right here. Again, let's take this out. We've got our market makers expected move high and low, so we know, you know, whether we go to the upside or downside. Those are going to be targets for us. From a strat perspective, you can have a reversal in either direction tomorrow because of the one that we had on the second 4 hour of Friday, right? So you can have a 2-1-2 down to the downside that would trigger at the low of this one, and you would be targeting, or the magnitude would be the low of this, the candle to the left of the one, which is this 2 down, so 32.12, right? So triggering at 32.70, targeting 32.12. So, you know, 50-cent move. That's not bad. Underlying move for SOXL at this price. You can see a 62-cent move was a 1.84% move on the underlying ETF. Not to mention you have the gap below. So there's all the reason in the world that you could, you know, take off some of your position here and leave some runners for the gap fill, or at least the test of last week's 50% here at 31.53. To the upside, you've got a 2-1-2 up that would trigger at this high, 33.05. And you would be, the magnitude would be the high of this candle, this 33.60. So again, a 55-cent move here, not a bad move for an intraday move. And again, if it does breach the high of this 2 down, you've got a 1 combo 2 down, 2 up, which targets the high of the candle to the left of the 1, which again is last week's high. So got a potential of 34.14 from a 4 hour perspective in the first 4 hours of tomorrow, maybe even the full day trade, right? If we're looking at the day chart, we've got a 2 down, a 2 up combo 2 down possibility, right? Which if that triggers, that really triggers the 3-2 up combo 2 down with the magnitude of the low of this 3. So again, that's a pretty big move. Not going to say that's going to happen in a day. That might be an overnight swing you need to take. But it triggers at the low here, this 32.12. Of course, you're going to have, because this is such a big move, you're going to have a couple of targets before you get to that magnitude. So your first target's going to be of course, the gap close. And then you want to shoot for something around, you know, either opening print for Wednesday, or the close for Wednesday, right? That's pretty tight range. So somewhere within this $30.50 to $30.40 area. That also have the market makers expected move low and last month's high that you'll have to contend with as support as well, right? So yes, you'll have a big magnitude of a 3-2 up combo 2 down, but you've got a lot of support that you've got to get through to go to it. So will it happen in one day? Possibly. Will it happen even with a one night swing? Maybe. It may take 2 nights. You know, you just have to see how price action goes, but at least we've got a trigger here and a magnitude here with targets on the way down. So let's look at the week And actually, we'll just take a look. Let's just go to our notes here so you have something to look at from a visual perspective, right? These notes are for Monday, September 22nd. Of course, these notes are from today. On Monday, there will be 68 trading days left in 2025. Close price on Friday was 33.02. We know what it's going to take to flip the month, the quarter, and the year red, but we don't know yet what's going to take the week to flip because, of course, price action hasn't opened this week. The expected move for the week is $3.01. That giving us a range of 36.03 to 30.01. We know what our gaps above are, and when we know what our gaps below are. Oops, I don't know why this gap is not taken out there. All right, and we know what our gaps below are. And then again, our 4-hour triggers and targets. We talked about this scalp triggers and targets, right? You can't really, you can kind of set those up beforehand, but not really until you know where price opens for the day, as well as where your overnight high and overnight low are. So you got to kind of know the rules and just be able to have them in your head to know where your triggers and targets are for that. But from a 4-hour, a full day trade perspective, or a full day, an overnight swing perspective, we've got our target of our trigger of 32.70 to the downside, with the magnitude of 32.12 and extended targets of 31.88 and 31.77. The 212 to the upside would trigger at 33.05, giving us a magnitude of 33.60 and extended targets of 33.91 and 34.19. Right, and then from the day perspective, you would have that 3-2 up combo 2 down, triggering at 33.12. The magnitude is 32.12. The magnitude is 29.16, but again, because that's such a big move, we got a couple of targets in between at 31.25 and 30.28. Then to the upside, you would have a 2 down, 2 up on the day, triggering at 33.60 with a magnitude of 34.14. Extended targets of 34.42, 35.07, and 35.97 or 95 to the upside. Right, so just so you have some visual numbers to put with the chart that we just went over. Those are your triggers and targets. Looking at the week, let's go ahead and flip back to the chart. And let's get a little cleaner chart here. For the week, again, if we go to the downside, we have a 2 up, 2 down. That would trigger at the low of this candle, 28.92, and have a magnitude of the low of this candle, 26.57. So 28.92 to 26.57, about a $2.50 move. It's a pretty good movement. You would get the gap fill. That would also flip your year back red, however, and we would have to kind of contend with that as being resistance again. To the upside, you would just have a 2 up, 2 up continuation. So there's no magnitude on a continuation from a strat perspective. Again, for more free information about the strat, check out the description in our video. But you can see we've defeated this this high on the week chart. So we've made a higher high. Whoa! So we've made a higher high in this sense. So we're looking to make a higher high on this candle right here, the 36.15, which is that magnitude for our quarterly move. So we are looking to break that. That will put us, if this is weekly broadening formation is going to be in our rear view, this is going to leave this broadening formation, this weekly broadening formation, as a resistance to getting to this high and making a higher high there. But we've rode broadening formations before, and it should be no problem. So to the upside, your trigger is 34.14, which is this past week's high. We're targeting first this weekly high, 36.15. Then we're trying to get into these gap closes, defeat this high as well. If you want to look at it from a numbers perspective, we would have on the week to the downside a 2 up, 2 down, triggering at 28.92 with a magnitude of 26.57. Extended targets of 26.11, 25.05, and 23.80. To the upside, we would not have a reversal. It's going to be a continuation. So again, we have a trigger and targets, but we don't have a magnitude. So the thing about reversals is we have a trigger and a very clear exit, which is where price should go to, and more often than not does. But with an extension or a continuation, you've just got your trigger, and you've got to look at your charts and your horizontal levels from price action that you've looked at in the past as a guide to your targets. So on the week, we would have a 2 up, 2 up trigger at 34.14, and we have targets at 35.07, 35.95, and 36.45. Right. Again, from the month and quarter and year perspective, we looked at those on the chart earlier in the video. We are in a 3-2 up. We triggered at 29.66. We have already taken out the targets of 30.55, 31.41, and 32.64. So the next target that we're trying to take out there is at 34.42. And then we've got continued extended targets at 35.07 and 35.95 if price wants to continue to push up. From the quarter perspective, we have that 2 down, 2 up triggered, the reversal triggered at 25.84. We're looking for that 36.15 as the magnitude, right? If we do reach that 36.15, remember it triggers that one combo 2 down, 2 up. So we would have a higher target of 38.89, 42.04, and 44.54. The year is the only thing that was giving us some grief. We did flip red earlier on, triggering the 1, 2 up, 2 down. It almost reached its magnitude of 621. We saw 723 back in on April 7th. So that technically is still on the board, but again, it's not in bold like these two are because it's not in force anymore. It's only triggered. That's why it's underlined. But if it was in force, it would be bold. And we're looking to just continue the hammer action that we have on the year. The more upward action that we can have, the more that hammer strengthens and gives us momentum to trigger the 2 down, 2 up into 2026. So, that's what we have here for this weekend's video. I hope everybody has enjoyed it. If you did, give it a thumbs up. It really helps the channel grow. We're just trying to help continue to spread, some free education, free knowledge. And hopefully a better way for people to trade, right? This trading method and strategy that we've displayed here is not only for SOXL. This method can be used not only the scalping method that we talked about with the 4-hour markers, but the longer term perspective with the strat and higher lows and the year flip and quarter and month flip, things of that nature. This strategy can be used for any ticker symbol for any publicly traded company. So that's just what we want to put out there, and all for free. I'm not trying to sell anything here, but we just want to help expose other people to SOXL as well. And it is by no means a new ETF, but it is one that can be used, especially in options, to use very little income to create rather large gains. So we like to use this from a daily perspective while we do still have, investments in other companies as well. Anyways, I hope everybody enjoys the rest of their weekend or has enjoyed their weekend, depending on whenever you viewed this video. I hope everybody gets some good rest on Sunday night and wakes up refreshed on Monday, ready for price action, ready for whichever way price action takes us, right? We've got triggers to the upside and to the downside. So we're ready, and we look forward to Monday's trading. So we'll see you out there, and good luck.